All right, shares Nvidia down about 5%. Off the lows of the session, though, the chipmaker cutting its revenue forecast due to a weaker outlook for the gaming industry. Want to bring in Mandeep Singh of Bloomberg Intelligence. I'm just really confused about this price reaction. The number comes out, it's pretty terrible. The outlook terrible. The stock is really getting beaten up, and then now it's just down by about 5%. What's the takeaway for you on this?
Yeah, so you have to remember Intel came out and, did the same in terms of taking down their guidance by over 15%. And so with Nvidia, it looks similar. The thing with Nvidia is the problems aren't structural like Intel. They don't have any issue with demand. Yes, gaming was weak, but we kind of expected it given what's going on with the crypto market and the fact that all the device shipments have been going down. People have been spending more on services. So net, I think the data center segment was really strong. Even with the guide down, data center is expected to grow 61%. And look, this company by 2025, data center will be almost $25 billion in revenue. So gaming exposure continues to go down. And I think that's what the market is focused on here.
Assuming we have the power to be able to drive those data centers. Mandeep, is there any macro signal in this?
Well, the macro is that people are spending less and less on devices, whether it's PCs, whether it's smartphones, whether it's gaming devices. So everything from a device perspective continues to go down. And look, estimates are coming down. They didn't come down enough earlier in the year, so now they're coming down. But that could be a sign that the market may be bottoming, and 3 quarters down the line, these companies may actually have better top-line growth.
So what's the read-through to other companies? Like, what company will be hurt kind of by this read-through, and which can sustain?
Yeah, so the one thing that stood out for me as a negative was Nvidia took down gross margins by 21% for next quarter. Now, the last time around they had this deceleration, they took down the gross margins by 10%. So clearly, it's from 65% to around 45%. That's a big, steep decline. And what it tells me is the cost of manufacturing these semiconductors is going up, which is why TSMC continues to raise prices. So it's helping them, but for the fabless chip makers like Nvidia, like AMD, they have to pay more, so their cost of goods sold continues to go up.
Mandeep, just as an aside, you talk to a lot of people in the chip industry, you analyze the chip industry. How worried is the chip industry about what's happening in Taiwan right now?
Oh, absolutely. I mean, all the largest chip makers, especially the fabless ones, they are, basically concerned about the state of the geopolitical situation and what's going on with China, Taiwan, and the U.S. And look, I think that's not changing anytime soon because there is that big dependence on supply chain in Taiwan, and that can't be changed. Even for Apple, I mean, that's such a huge risk, not because China is a big end market, but because they can't make the phones or the iPads anywhere else. So clearly, at the chip level as well as the device level, there is a big dependence, and it's a boardroom discussion that's not going away anytime soon.
So, Mandeep, to that point, and then wrapping in the sort of higher cost for manufacturing chips kind of across the board, is this a structural shift higher in how much it's going to cost for chips that are going to continually hurt fabricators? Like, this is not going to be a peak price situation.
Absolutely, Alex. You hit the nail on the head. This, to me, is the inflection where every chip maker is looking to diversify the supply chain. And now it's not about the lowest cost outsourcer or, the fab maker. So diversification itself is going to take up their cost of goods sold. And over time, I feel if they bring it back to the U.S., whether they give it to Intel or someone else, the gross margins will come down for all the chip makers.